It's a low risk, high reward trading strategy, unlike scalping or intraday, because basically with those you're looking to get in and out the market within a couple of minutes or within the day, and basically sometimes news can just take you out of those trades and hit your stop losses, and then usually what will happen is your stop loss will get hit, and then the market will suddenly reverse. The idea with a swing trading strategy is that you basically want to catch the corrective wave and then enter the trade once you've confirmed that the trade is going to continue in its trending direction. Now, obviously, the market doesn't trend all the time. It follows different patterns. It ranges, and there's also lots of other stuff such as news coming out, which constantly affects the market and changes it in every aspect. But this one should be really simple. And I think it's for beginners and intermediates as well. It's about 80%, 75% accurate, and the accuracy doesn't necessarily matter. It's about how many pips you're catching along the move. I mean, you could easily make a profit with this strategy, winning like 40% of the time. So you can easily make a profit. Obviously, I'm not guaranteeing you profits. I'm just saying, like, keep your risk management good, your money management well, and if you protect your stop losses, you can make a profit on a 45% or 40% winning or 40% strategy, either way. But this one should be really easy for you guys. So I'm going to get started. So what we need to have is a 4-hour chart just like this. Okay, so you can have it on any pair you like. Doesn't really matter, but obviously, as you might know, some strategies work better with some pairs and others work better with other pairs. It's just the way it is. You can't really control how the market works. But what we need for this strategy is a 200 smooth moving average, a 20 smooth moving average, and a 10 smooth moving average. Now, these colors of the lines don't actually matter. Okay, so what we need to do is add these in. We need to go to indicators up here, type in SMA just like that, and we'll have smooth moving average. You want to click this 3 times, so just go like 1, 2, 3, just click on it, add those in, and you should get 3 coming just along down like this. Okay, now we want to format, because you should have 7. All of yours should be labeled as 7, and essentially what that means is the last 7 candles. It gives you a rough average and just gives you a smooth moving average based off the last 7 candles. We want to actually change that to 10. So the first one, the length will be 10. The style is quite thin and it's a light brown color. The next one is 20. It's a bit thicker, light blue, as you can see, just like this, and the source is closed on all of them. And this one's our 200 smooth moving average, and basically this just gives us a trending direction and is also used as a confirmation for entry. Now, once we have this, I'll just minus this so we can actually see the chart. Okay, so the rules for this strategy: if price is above the 200 smooth moving average, which is this big line here, then we're looking for longs, and if price is below the smooth moving average, then we're looking for shorts only. Okay, now we need 2 confirmation signals, and to confirm that this trade is valid, we need the price to be above the say for a long, for instance, if we're going to long this, I'm going to find you an example down here. Okay, so we need price to be above the 200 smooth moving average, which it has done, so we're going to give that a tick. And then what we need the 10 period smooth moving average to actually cross up over the 20 smooth moving average. Okay, so if it crosses down here, we don't enter it, okay, because that's an invalid entry. It might actually just be a fake out. It could be a stop hunt, and then basically what it could do is just reverse like this. We want to actually wait. We want to wait for the market to come up. Once we've had the crossover, which you can see here, we're then anticipating the market to be bullish and can then reverse. And as you can see, we had a nice bullish candle right here. and then the market reversed just here, and that's where we would have looked to enter. Okay, and once you do that, once you're in on the trade, say for instance we would have entered on the next candle, the bottom of the next candle will be here, we'd then ride the trade up, and as you can see just off of this trade here, maximum you would have got 322 pips. But what we're going to do, we're going to protect our stop losses on the way up. So what we'd do is I'm going to draw you the line. So this is the maximum we can take, and out of this whole maximum, what some of you might do, you might close a trade here thinking that the market's going to reverse. Some might close it here, and some of you, obviously if you're amazing, you would have closed it there. Okay, but get rid of those, there's a different way you can actually maximize your profits on a trade. I'm going to show you exactly how to do that. So what we want to do, as the market is moving up in our direction, we move this stop loss that we have placed here up to the next low. Okay, and apologies, I forgot to mention actually where to place the stop loss. You want to place a stop loss below the last swing low, which was here in an uptrend. Okay, so that's below the last swing low, just below it. So if price does come back to retest the area, then and it reverses again, then we're safe. Obviously, don't put your stop loss tight right on the line there, because then sometimes it will just create a double bottom possibly, then just continue going upwards whilst your trade has been stopped out. So you just want to give yourself a bit of leeway, have that open. But anyway, going back to this, once we're moving up, just like here, you can see that we move this stop loss to break even once the trade's running in profit. So say once it's in 30 pips profit, we then move this just up like this up here. This now means that if this trade, for instance, reverses for some random reason at all, our trade is completely protected. We won't lose any money. This is a risk-free trade, so whatever money we make is there for the taking. Okay, so we got no risk to worry about. So essentially what we'd do is wait for the market to move up, create the lower high in an uptrend, and then we move the stop loss. We go on MT4, move the stop loss to here, and then we wait for the market to continue moving upwards. Okay, then the next low, we move it there. Obviously, again, we move it there, and finally the market would have taken out our stop loss, and we would have had a total of 227 pips. Okay, and that's just based off a simple swing trading strategy. Okay, and what you can essentially do is use this as open and closing. You could technically wait for these moving averages to cross over, and then that could be your close, and then once they cross over again, that could be your indication to buy. And as you can see, they haven't crossed over for quite a while. Just to give you an example of how much you can yield on a trade like this, so MA's crossed over here. This would have been our entry. Our stop loss would have been last swing low, which is say here or here. It doesn't really matter. Just for argument's sake, we'll say about here. Okay, and if you left this trade run, look how many pips you would have bagged. Maximum we could have bagged, obviously 700 pips. But if we're trading in the smart way, just like this, we might have got stopped out here, but we could have re-entered, obviously on a bullish candle, moved our stop loss all the way up. So what we do, we wait for the next bullish candle, and then that's when we move our stop loss up. So we're coming up, we wait for the bullish candle, move our stop loss up, and we continue doing this all the way up until at one point, market stops us out, but it's fine because our stop loss has been protected and we barely lose any money. Okay, so that's 637 pips on the 4-hour chart on the Euro USD. So super simple. Obviously, you guys might be wondering where this trade has come from. It hasn't come from a moving average crossover at all. This was just an Elliott wave, using the Elliott wave theory, and I'm just basically catching wave 5, hoping to get 150 pips. This is just a trade that's going to be running, I know, for maybe another day or so, so we're just going to leave that to run. But anyway, moving back to just a short opportunity. Obviously, I'm not guaranteeing you to win every time, but if you use the confirmation signals, as you can see here, it's come through down. The MAs haven't crossed over again. They haven't crossed in a sell position, so we don't take a sell. You wouldn't take a buy until the price has crossed over in the area to buy. Okay, so just keep that in mind. So I'm just going to find you a good example of a sell opportunity. And like I mentioned, the market doesn't trend all the time, but when it does, you can catch huge moves. which will basically essentially make you a lot of money. Okay, so price closed under here. That's our first requirement that needs to be met. Price then crossed over. It couldn't penetrate the 200 SMMA because it used it as an area of resistance. Then we had probably some news come out here on the economic calendar. Could have also been a stop hunt because the way it's been bought and sold like that could have just been wiping out some people's stop losses by the big institutions. But anyway, we had the crossover here. Okay, that's the candle, and our entry would have obviously been at the base here. We would have then gone for a short, and obviously, obviously it's easy to say in hindsight, oh, you just do that or do this. But I've actively used these, and I currently trade my strategies that I'm showing you guys. I'm not claiming them to be mine, but the ones that I'm using, I'm currently trading them, and I'm finding them to be useful. So I just show them to you guys, hoping that you guys will like them as well, and find them just as useful as I did. So over here, this would have been the high. We could have entered on this candle here, so apologies for that. We'll pull down here because that would have been the confirmation of the reversal. We'd place a stop loss just above the high here. And as you can see, if we obviously maximize this trade to the full potential, we would have got 5.2 on our risk. So say you risked $200, times that by 5, that would have been the reward you would have got. So 1,000 if you got this all the way down. But we can't always catch all the way down, but it's fine. So what we do, we wait for the pullback, we confirm it's continuing in trend direction, stop loss place there, confirm the direction, stop loss place there, and we work our way down slowly, okay? And then essentially here is most likely where we'd have got taken out because we would have put it there. And if we actually just check how much that trade would have yielded, 247 pips, a 3.42 ratio as well. And a 3.42 isn't bad at all. Bankers, they're aiming to get at least a 3-to-1, which is just like that. They'd be honestly, they'd be real happy with this. Okay, so for anyone to get more than a 3-to-1 is really good, and it's also quite nice just to set yourself a couple targets. But just briefly brushing over, anyone who's interested in signals, check out the website in the description below. It's www.how-2-forex.com. I've been providing some pretty good signals. People are happy with them. They're low risk, high reward, and I'm currently using the Elliott wave. The next video I make will be on market structure, and then I will go on to then discuss how you trade the Elliott wave theory and how you essentially just catch wave 5 here. I wasn't too keen on Elliott wave actually until someone mentioned it to me when they showed me their results and just said give it a go. Then I spent about 4 or 5 days just solidly making sure I knew what to do, and then obviously put it into practice on a demo account, and then went into live and had some real nice results. So I've just continued to use this strategy. But this is a trade at the moment. I actually posted this trade earlier. I just want to show you guys. So this is when I posted it. This is last night, I'm pretty sure. And then obviously now this is where we're currently at. So we're just down here. So we're only 52 pips in profit, but we've brought the stop loss to break even. So essentially now if the market reverses, we ain't going to lose any money. So we're completely protected with regards to that. So if you want some signals, just message my number and I can give you some more information on that as well, because I'm currently running a Christmas special offer. All right, thank you very much.